Hey, maybe you're interested in investing in multifamily syndications, and a question that I get a lot is, "Hey, well, this is great. I want to get started with this stuff, but how should I allocate my net worth here? Okay, I'm going to get started with this, and maybe I'll pull some out of the stock market, but over the time, like, how much should I put in this versus stocks and maybe something else?" So, to help us dissect this problem, I have on the show with me Bronson Hill. How are you today, Bronson?
I'm doing well, Michael. Thanks for having me today.
Yeah, and so not only are you director of investor relations, so you're dealing with these questions a lot, but also you also have some kind of background as an investment advisor. Tell us about that. I didn't know that about you until recently.
Yeah. So for a couple of years, I was an investment advisor with some alternative assets in the past, and I think there's some really interesting things when we talk about. And just to clarify for everyone, I am not giving anybody any specific advice as far as what you should do. You should consult your financial professional, your tax professional, your legal professionals. These are just conversations. But a conversation that comes up a lot as an investment advisor is really what is a suitable investment for an investor. And what that means is if somebody has a low net worth, they should not necessarily be in a high risk investment. Or if somebody has a high net worth, what sort of risk tolerance and what does that look like as you go through whatever investment you're investing in? And so this word suitable comes up. Now, none of us really want to be in like a suitable, just an okay suitable investment, but it's kind of something that we look at as far as how we allocate. So there's kind of a guideline that is used, particularly with financial advising, that they use this, and again, this is all educated by Wall Street because Wall Street is very biased to try to get you to buy Wall Street products. But they'll say if you have 100% of your allocation, you should put basically 100 minus your age is what your allocation should be. So let's say I'm 50 years old, then basically you should be 50% in stocks and 50% in bonds. If you're 70 years old, then you should be 70% in bonds and 30% in stocks. How they allocate, but allocation is very important. So whether you're investing in stocks, bonds, you're investing in alternative assets like multifamily, it is a very important consideration. So, Warren Buffett, he says something about diversification, that there is this theory that basically we should be invested in everything under the sun. We should own the entire stock market. Everything should be diversified to the ultimate thing. He says that diversification is kind of a myth, or it's a crock, that really if you have 6 specific stocks you're investing in, or I would even say 6 specific type of things that you're investing in, maybe it's multifamily deals or things like that, that you have a certain level of diversification. So the first question, I'm kind of bouncing around. The first question is really, how much should I be diversified into multifamily? So maybe you've decided for your situation, 20 to 25% of your net worth might be a good thing. Some people will go much higher. They'll say, I feel comfortable with this investment class. They'll be at 50, 70% of their net worth. Again, these are things that you have to take into account, your own consideration. But again, how much do you want to allocate to multifamily? And then it comes down to how do you diversify in between that.
Yeah, that makes a lot of sense. And in the beginning, obviously, I think the advice is, get started small and kind of get your feet wet. And with any kind of new investment you're doing, whether it's multifamily or oil or gold or anything like that. But like you said, over time, and there's people that I've interviewed on the podcast previously, they're basically putting 100% of their entire, taking everything out of the stock market and putting in a multifamily. And that is up, that's up to them. I think as your risk, not your risk, as your comfort zone expands with a certain asset class and you get more excited about it, people will steer more into that. Now, related to that is how many deals should I allocate my funds into? In other words, let's say I have, whatever, $200,000 I want to invest. Do I put it all in one deal? How many deals do I put it in? What's your thought on that?
Right. So the first question goes back to your allocation. So let's say someone has $1 million of net worth and they say, okay, I want to put 20% of what I have, I want to put it into multifamily. So in that case, you have 200,000 to invest. So I would say it's always better, rather than putting 200,000 in one deal, you want to put it in 3 or 4 different deals, because it gives you some diversification, because you have some deals that may perform phenomenally well and some deals may do okay and some may not perform as well. So that's why having a little bit of diversification can be really helpful. So that's something I'd recommend.
Yeah, that's awesome. So what do you think is a goal? So someone's just getting started right now, and in your mind, let's say over the course of 3 to 5 years, what do you recommend they do? How do they approach it, and how do they allocate their investments with regards to multifamily syndications?
So that's a good question, Michael. I think really the biggest thing that a lot of people are getting comfortable, I'm sure a lot of people watching this as well, maybe you're watching this, is just getting comfortable with the multifamily syndication asset class. Because again, if you only have looked at stocks and bonds, and again, who's really educating on this? It's large institutional investment firms that are multi-billion dollars. That's basically most of the education we get is through retirement plans and other sorts of stocks and bonds. So if I, as an investor, can start to become more comfortable with, hey, I know I can get double-digit returns by doing something outside of the stock market where it doesn't have the volatility. So again, you start with something small. You start with, maybe at 10% or maybe even just a minimum. I know some people that have millions of dollars and they put the minimum into several, a couple different deals and they try it. So really what you're trying to do is you're just trying to become comfortable with this asset class. You're trying to become comfortable with some of the different providers that you use, because there is some variance, whether it's our group or other groups, there's a variance kind of between that. But once you know you can get a consistent double-digit return on what you're investing, that's a lot of power. And there's a lot of professionals, my background is in the medical field. There's a lot of physicians I work with that make a lot of money, but they're owned to that job. And that's what's awesome about passive investing, is once you free up that, you realize you actually can invest in things and have a team that does these things for you, and you're getting that cash flow, that mailbox money, or those deposits every quarter, every month. It's pretty incredible. So I think that's the thing, is becoming more comfortable. And then over time, you can go from putting 5-10% of your net worth into maybe 10, 20, up to 30, and then you kind of get to where it's like, well, really, do I feel comfortable with this? But I think that's the big thing, is getting a comfort level with that.
All right, so what I'm hearing is get started small, and like you said, even someone with a very high net worth may actually invest a minimum investment amount with any particular operator. Invest small. Don't invest all of your investable money with in a particular deal, or even maybe in a single operator. And then, and as your comfort zone expands and you get more excited about the returns and the cash flow, and at that point, consider expanding your allocation. That's great. I love that. I think that's really good advice. Where can people find out more about investing in multifamily and maybe even investing with us?
Right. So we've put together some resources just about kind of some of this comparison between the stock market and as well as multifamily syndication. So Michael, I know you did a great job putting that resource together. So this is actually found on the michaelblanc.com/report. And it's just this report. It's a pretty extensive report that talks about comparing the returns and the volatility of the stock market with multifamily. It's an excellent report. The second thing is, if you're interested in getting involved with deals that we do, you can go to nighthawkequity.com, click the join button, and basically it will set up a call. We'll be basically able to have a conversation, see if it's a good fit to work together. But just really want to appreciate you taking the time to educate yourself, because that's the biggest thing you can do, is really educate yourself through videos like this and learning and networking. And so well done on that. But we'll look forward to seeing you on the next video.